Hey everyone. Okay, today we talk about contract trading. Okay, contract trading is pretty scary stuff. There is a lot of money to be made and a lot of money to be lost. So contract trading is definitely understanding levels and what they represent. So we're simply going to do a live trade here, build off of the scalping, swing position, and position trades that we built upon in the previous series. So I think we all understand the difference between procedurally, why we should take those trades and where we should take those trades and what they represent. So the data behind those trades is what's more important. A lot of people get it confused, right? Like we talked about, a lot of people think that just having the raw information of, a position trade means we're in it for a long time. That doesn't mean anything. Understanding why we enter position trades is the more important information, right? That's the definition that will allow us to make more money. When we're talking about trading contracts, when we are looking at some of these bigger and deeper positions, we need to be very aware of the different scenarios that can happen, okay? We simply right now have marked our origin level in here, okay? So you can see where the origin level has been tested and held and all this stuff. So we have what we want to target in terms of a trade. We have a target that we're comfortable with. Now we need to understand what are the different scenarios that can happen upon touching it, right? Because you have a couple different things that can happen here. You can go straight up and fall short because everybody starts shorting at, say, 10,384, and you get a ton of volume to pull back. So if you're sitting at 10,401, you may never get filled, okay? You can alternatively go right over top of that, look like you're about to break up, and then have a huge pullback, right? Maybe it might not be that drastic. Maybe it might go, I don't know, maybe 10,450, and then it has a huge pullback. Or you could hit your target dead on, and then you could have a huge pullback. So there's kind of a balance to be had here, right? There's kind of a risk balance to be had. If you're doing 100x on your position, then what's going to happen is at 1%, you're going to be liquidated. So if this goes up too much, like so, if it goes up to 10,480, for example, your position is going to get liquidated because you entered too soon. However, you might miss a trade, right? If you go too much on the nose of the move, you run the risk of either missing the move because it shorted too soon or not getting the greediest price. So there's kind of this balance to be had here, right? The best way to do this is to have a set target and be comfortable with it. And if you miss the move, oh well, too bad, so sad. That's the best way to do it. So if we go and look at my trade here, you can see I have my trade marked at 10,398. You can see that 10,398 on the Binance futures chart is extremely close to this. I think it's maybe, well, I suppose we could just hover over the candle and see what the price is. $10,408. So I'm $10 below that. I might reduce it $1 more. What I want to protect myself against is getting liquidated if this thing just skyrockets above some level, $100 over what it's supposed to be before it pulls back, right? Because this happens too. So if I was right here, I want to protect myself from this thing going to, like, say, $10,505 or something before a bigger pullback happens and all the greedy people come in. But I also don't want to be greedy because this is going to be a knife catch. So this trade is going to kind of pan out in a few different ways. You have two sequences of events. We identified the first three where it falls short, it hits the target perfectly, and it slightly goes over. Okay. This is sequence one of events. Sequence two is it actually goes, tests this level, and then breaks up over top. And you never actually have a short complete here. So there's something very important to know. This is going to be a knife catch level. So whenever you guys are taking these contract trades, you need to understand what the level represents. What is the data telling you about the level? Okay. So the data here is that this is an origin level, right? This origin level is telling you what? It's telling you that it's a breakout level. So if you see the price go like this, come up, hold its range, continue to hold its range and slowly ladder down, but continue to kind of build out a trend like this, rebuild its second trend, right? Like cycle up. this is probably going to be breaking out. Things don't hold their range against a level like this unless they're typically breaking out, especially an origin level, right? Like this is a pretty polarized type of level. You're either going to knife catch, reject because a billion shorts are going to come into here, or you're going to look to set up a breakout on this level like that. So you have to understand what the level that you're targeting is. Are you targeting a breakout level, right? So maybe we can go and look at a few other examples of what has happened in the past. Okay, so here's a good example. You have an origin level here, right? Same thing. You go up, you touch the level right here, and you instantly knife catch it. Now, this looks like it was originally an inverse level. So this is actually telling you that it's failure. So you're knife catching failure. So this was a little clearer, right? Like the data here represents failure. So you're knife catching failure, and so be it. It looks like we also have an origin right there. Why do I have it marked here? No, I'm sure there's a reason why I have it marked there. That's fine. I'm going to leave it there. I'm sure I've worked my way through timeframes and had it marked there. Here's another example of what the data represents. Inverse level touches the inverse level. That's rejection, right? What's this? This is a breakout level. So when we break above that, it's going to break out. This is another breakout level. So when we break above that, we're going to break out, right? Origin levels. You see how this is kind of the exact scenario that we talked about. You go up, you touch an origin level, you pull back, but you hold the range. Once you hold that range like this, you are going to probably be breaking over in a big way, right? So, and it happens right there. You hold the level, you hold the range, you hold the level, and then you break out in a big way, right? So let's see what's next here. Come back up to our level up here. Come on. You just want to go? Yeah, I guess I could have just moved the chart and closed it out. So now we can kind of see that what scenario is going to happen here. Are we going to be holding the range, right? Like, do we create scenario 1, which is on the left here? Is it scenario 1 where you're knife catching this level and it's having a huge pullback? Or are you in scenario 2 where you've touched this level and you start holding your range, right? So this is kind of how you have to dictate your differentiation here between contracts, because what might be an ideal short might hold its range, and then you need to get out of your position before you lose all your money. Because if it's starting to hold its range, if it's starting to do scenario 2 here, you can instantly see how it's going to have a bigger breakup to a larger level here. Understanding how we have to trade contracts and how we have to trade leverage is pretty crucial and important. It's not so much about just picking levels, tossing a contract, and crossing your fingers, right? There's always a way to see exactly how you should handle your contract. So this is kind of a live example of what I'm looking at right now, just to walk people through, like, oh, okay, so this is a trade that I would take, right? And I would see this, and I would take this trade with caution. I would be monitoring this because I know this is a polarized level. I know that this is going to touch it and pull back pretty hard, or it's going to hold the range and attempt a large breakout. So it gives me a very clear directive of what I want to do with this trade and kind of what I expect from the outcome. So yeah, this is something that I would put, 100x kind of position on, because there's not a lot of risk, I don't think, and see how it reacts when it hits the level. Okay, so we're back. Last night we were looking at this chart and we had our order up looking to try to take a short here on Bitcoin as a position trade, and how we treat these position trades as time goes on. So this is not something I felt comfortable with leaving overnight. Now, sometimes I do feel comfortable leaving position trades overnight, or shorts or longs, basically hoping it gets filled while I'm sleeping. And this is not one of them. Due to the type of level this is, due to it being an origin, we talked about this yesterday. If we do take a short here and we're sleeping when this happens, and it happens to sit here and push its range like this. Oh, let me move this over. And it does happen to sit here and kind of push its range like this, right? We're sleeping. It's 3 or 4 in the morning or something. And, it comes here. Our order gets filled. Yeah, great scenario if we pull straight back and we wake up to profits. But if we do sit here and hold this range, this thing could completely fly before we wake up. So in this particular trade, because of how polarized it is, because it has kind of 2 actions that it's going to have here, it's going to either reject in a big way, or move up in a big way, right? Due to it being a breakout level, I should say. We don't want to leave this unattended. So last night we went to bed, we closed our positions, very simple. And this morning we reopened it again. And then you can see simply here, this is trying to just hold its range and, break its move and break its trend. So we came back, we opened our position here in the morning here. When we woke up, we set it to a level that we think is going to get hit. That's pretty greedy. Hopefully it does. And we'll be monitoring it just in case it does come and say it pushes this level and falls short $10 of our trade. If it starts to pull back, we're going to get into the short pretty quick there. So we are definitely going to be monitoring this, not stuff we can do while we're sleeping. Again, we can have something, say like this, for example. Let's go and break this chart down. And we have a hold level right here, right? You have a hold level there. We're going to find the actual valley. Yeah, you can kind of tell it sits right here. So this is something that I'd feel comfortable taking maybe a long on overnight, because I didn't feel like there is going to be a move up to here with, a breakdown before a move up to here, right? So what I'm saying is that I think this is going to move up to here and we can make our decision here, but I don't feel like it will fail this target and just pull straight back. Instead, what I think is going to happen is I'm going to be able to take a long on this valley relatively safely and then see what happens, right? Close my position somewhere and then take my reshort here. This is something I would feel more comfortable leaving overnight than trying to knife catch a possible breakout level. Because again, that breakout level it's not necessarily going to just break out. It doesn't have a guarantee that it's going to break out. It's either going to, again, I keep saying this, but two options here. It pulls straight back, or we go for a large breakout to a trend or some other level that we haven't really looked at yet. So we are simply just going to leave our short open. So we came back today to leave the short open. We're going to be monitoring this. There's no benefit in leaving this overnight. Again, this is kind of sloppy trading when you just kind of cross your fingers and hope. We can take all these other trades in here in the meantime. Like I took a long here down at $10,035, right about here. And I closed it on the trend, right? Because you have the trend kind of goes, well, here we can use the rate tool. Find the exact level here. So you have this to this right here, which actually adapts to this second candle right here. I know because I've already done this. And I simply was able to close a short. And when this level gets hit, I know that it's going to attempt to continue to break up, right? So it's going to continue to hold the level. This is the perfect level to get out of your long position at. It's the leg of the move on the top side. So it's the top of the valley. This is saying the move is going to break. It's also the trend. And when it passes this trend, it's already set up to break the move. So now we can simply look at taking another re-entry down here in the 10 kind of 53 or 54 range, something like that, or 1055. Just see how it reacts and if it's something we want to take a position against. And then we can re-long this again. Again, relatively safe. Very much scalp trades, right? These are not position trades. We are looking to take a position trade up top and take this kind of scalp trade from below. So this is, sloppy trading if we decide to leave a position like that. And it's not because we shouldn't be leaving positions overnight. We can leave positions overnight. This is due to the type of level and the type of reaction that we're expecting. If this doesn't knife catch, it's going to break out in a big way, right? So this is, again, something where we could, kind of roll the dice, and sure, I'm of the mindset that I'd rather miss the move than to roll the dice on something, because you can always make money in the markets. You don't have to force it, right? So this is just kind of a day 2 follow up to this trade and how I treat it, how I treat these position and contract trades. A healthy way to look at trading when you're talking about big leverage, when you're talking about starting to do 100x on things, when you're needing to micromanage these positions, is very important to make sure that you're micromanaging them properly and that you know exactly what to expect, so that in the moment when these things are happening, you can make your decision and still be in profits before, something terrible happens. Okay. All right. See you guys on the next one.